What if I told you that Bitcoin is quietly shaking the very foundation of US dollar supremacy, and not in the places you'd expect? According to a former top economist at the IMF, the dollar is losing ground in a hidden $25 trillion market. Let's dive into this explosive revelation. Kenneth Rogoff, the former chief economist of the International Monetary Fund, has just dropped a bombshell. In a recent interview, he declared that Bitcoin is already influencing the demand for US dollars in the world's shadow economy. Yes, the unregulated, untaxed segment of the global economy that's worth a jaw-dropping $25 trillion. Rogoff's argument? Bitcoin isn't just a speculative asset anymore. It's become a powerful tool in parts of the economy that operate outside legal frameworks, what he refers to as the shadow economy. What is the shadow economy? The shadow economy includes everything from small, unregistered businesses to large-scale tax evasion schemes. In developing countries, this gray zone can make up a third of the total GDP. Governments can't fully control or monitor it, and that's exactly where Bitcoin fits in perfectly. While most of the mainstream economy still runs on fiat currencies like the US dollar, the shadow economy is turning to cryptocurrencies for a key reason: privacy and decentralization. Bitcoin offers a way to transfer value without relying on banks or governmental oversight, and that makes it ideal for transactions that want to fly under the radar. Why this threatens the dollar? Rogoff warns that the dollar, which has ruled the global economy since World War II, is now facing cracks in its dominance. These cracks aren't just caused by traditional competitors like the euro or the Chinese yuan. Bitcoin is now actively substituting the dollar in this underground fin world, and this shift isn't symbolic. Rogoff emphasizes that as much as 20% of global GDP, a figure estimated to reflect the size of the shadow economy, is now increasingly driven by cryptocurrency, not the dollar. Real-world impact: higher US interest rates. This isn't just bad news for economists in theory. It's already hitting the American economy in a real way. Rogoff claims that the lower demand for US profits dollars in the shadow economy is one of the several factors driven up interest rates in the US. While many point to inflation, government debt, or monetary policy as culprits, Rogoff's analysis adds a new layer to the conversation. The hidden, untraceable flow of crypto is indirectly putting pressure on American financial levers. Crypto's growing influence. Critics often say that cryptocurrencies have no fundamental value, especially when it comes to real-world use in transactions. But Rogoff counters that argument head-on. In fact, crypto's role in sanctionev and gray market trading proves its transactional utility, especially where regulation fails to reach. And here's the kicker: this trend isn't going away. Despite incoming crypto regulations in many countries, Rogoff predicts that governments will struggle to stop it. The decentralized nature of Bitcoin makes enforcement nearly impossible in certain regions. Conclusion: Kenneth Rogoff's warning is clear. Bitcoin isn't just an investment, it's becoming a disruptive economic force. Its role in the shadow economy is quietly undermining the dominance of the US dollar. And as that influence grows, the global financial balance could shift in ways we've never seen before. So is Bitcoin the future of the unregulated economy, or a threat to global monetary order? Let us know your thoughts in the comments. And don't forget to like, share, and subscribe for more deep insights into crypto and finance.